Well, hello everybody, and welcome to training this evening for COVID resources for Alaska businesses. I'm so grateful you guys were able to join us, and that we've got a special guest speaker. Really quick, I wanted to kind of go over a little bit of housekeeping before we move forward. And just to remind you with Zoom, please have yourself on mute when you're not speaking. We love to hear your voice and have you contribute and participate with training tonight. So please feel free to use the chat and take yourself off mute at times when you do want to contribute. However, when you're not speaking, please remember to put yourself on mute to help with some of the background noise. And that'll be part of my job today, is going through and remuting yourself if you forget. Video is always highly encouraged. We love to see your faces and be able to connect with you. However, if you don't have the ability to have yourself on, or sometimes I know you're having dinner, but we still would really like to be able to see if you can. We do have some of the Zoom controls. Hopefully many of you are taking advantage of all the great free training through Thread, and so you've already participated in other Zoom classes, and if you don't know, training will be free through December, so we still got another few months to be able to offer these great trainings to you. If you do want to participate, I talked about the chats. There are options for raising your hands. I am going to go ahead, and I know Melinda Myers, Thread's Chief Operating Officer, she'll be kind of monitoring chat for us this evening. And Jessica Simonson, one of our professional development specialists, will be doing attendance. Please make sure in the chat box you put your name or change your name for your participant to the name you registered with, so we can give you credit. This session is being recorded, and I did just start that before I started speaking. But I'm going to go ahead and turn it over to Melinda.
Thank you, Cassie. I am so excited to see everybody on this workshop tonight. My name is Melinda Myers, and I'm the Chief Operating Officer here at Thread. And I want to thank you all for joining us for tonight's training, COVID-19 Resources for Alaskan Childcare Businesses. This is the first in a series of virtual workshops Thread has designed to connect you with COVID-19 resources, experts, and each other. Because a lot of the information we have shared with early educators thus far has been written, we thought these workshops would give you all the opportunity to have a more interactive way of getting information from Thread on topics that you are needing more support or information on in a live and more conversational format. As a reminder, as Cassie said, this session is being recorded. Only those educators who are attending the live training tonight will receive training hours. Anyone watching the recording are doing so for informational purposes and will not receive training hours. And Cassie, just to clarify, will the training be posted on our website?
To be determined. I believe that's the case.
Okay, we will send out information on that once we have that confirmed. And let's see. And so now for our first workshop, we are pleased to have Jonathan King as our facilitator, who is Thread's board treasurer and owner of Halcyon Consulting, an economic and performance consulting firm dedicated to helping clients achieve extraordinary results through accountability, integrity, and personal growth. And today's presenter is Jon Bittner, who is from the Alaska Small Business Development Center. And with that, I will turn it over to Jonathan.
Thank you, Melinda, and welcome everyone. Thank you for spending your Thursday evening with us. If you're here in Anchorage, it is a lovely sunny evening, although as you can tell from my hair, it is definitely a little windy outside. I want to thank all of you for coming on behalf of Thread's Board of Directors and Thread staff. We are thrilled to have you here, and we are thrilled to have Jon Bittner here to speak to us. We also want to thank you for the daily difference that you make in the lives of the children that attend your programs. I know that our children attended preschool and early childhood experiences from the moment they were infants, and it made an incredible difference in their lives. We want to thank you for that contribution that you're making. Those children will remember you for a very long time. So tonight, as our guest speaker, we have Jon Bittner. Jon is the Executive Director of the Alaska Small Business Development Corporation. He oversees 7 regional centers spread around the state and over 20 staff to ensure that SBDC provides accessible, high-quality business assistance services to Alaskan entrepreneurs and small businesses. He formerly served as the vice president of the Anchorage Economic Development Center, should be corporation, I believe, John, and as the deputy commissioner for ADCCED, the Community Commerce and Economic Development. I will also let you know that he throws a very mean pumpkin carving party about the 3rd week in October. He's a great guy, and we're thrilled to have him here because we need you guys to stay in business. Alaska needs you to stay in business and to keep delivering the services that you're delivering to children. So with that, Cassie will hand over control to Mr. Bittner, and Mr. Bittner will take it away.
Thank you very much. Let me see if I can share my screen here. Hopefully this works.
You should be able to. There it goes.
We can see my presentation?
Yes.
Fantastic. Thank you so much for the kind introduction. I'm actually really hopeful we'll be having another pumpkin carving party this year. It's still kind of up in the air. I'm not sure you can do that via Zoom. It's not quite as fun, I think, for anybody except maybe the kids. Thank you so much for having me, for giving me the opportunity to talk today. I apologize that I'm a little informal and I am growing the sad attempt at a beard here. I'm actually on vacation with my family. My wife's birthday was last week. It was a big one. I'm not going to tell you which one, but it was a round number that she would not be happy if I shared on a recorded webinar. So I didn't bring any dressier clothes than this pink pineapple shirt that I'm wearing. It's the only thing I had with a collar. I do apologize. The Alaska SBDC, the Small Business Development Center, we're here to help entrepreneurs, small businesses, basically in normal times, start, grow, excel. Recently, it's been more survive and try to stay informed. That's really been the bulk of what we do. We've created a web page specifically for COVID-19 resources. It's on the slide there. Our services are free. We're happy to help anybody. And we have a lot of things that you can do on your own, on-demand training similar to this, although not as targeted. I'm actually looking forward to seeing the other programs and trainings that you host on your website. I think that's fantastic, a great resource. We also do one-on-one advising. And through that, we've seen a really interestingly granular look at what's been happening to the Alaska economy sort of over the last 4 or 5 months. I'm going to go over a few things. I'm going to start with sort of a general overview of what's been happening with the economy, and specifically pieces of it that I think tie in with your industries or your businesses and the importance that the important role they're going to play if we are going to come out of this and reopen the economy. Then we'll go on to some different types of funding mechanisms that are out there, federal, state, and local, and talk about sort of how effective they've been, how much money has been deployed, and where that money was actually deployed. And then last but not least, I want to spend a little bit talking about something a little more topical, which is the recently released Senate proposal for a new round of relief funding. There's actually 2 out there right now, one from the House, one from the Senate. They're currently sort of negotiating it out to try and figure out what they can agree on to pass. The nature of that bill, whatever it ends up being and whenever it ends up passing, is going to have a huge impact on sort of what happens in the next 3, 6, 9 months. And I'll talk a little bit about what the options are there and how to sort of keep ahead of it and see if what part of it applies to your business. So to start with, let's talk a little bit about what's happened. And I think I'm sure I don't need to tell anybody, it's been bad. In terms of the unemployment, in the first 12 weeks after sort of the official COVID-19 disaster was declared, 118,000 initial unemployment claims were filed. To give you a feel for what that means, in an average week, about 930 initial unemployment claims are filed in any given week. During COVID-19, it's a little over 8,750 unemployment claims filed every week. It's a huge number. Now, here's the part that I think is sort of of particular interest to you. If you look at the, I apologize, the graph is a little hard to read. It's difficult to squeeze it all in there. But what this is showing is the business closures over time. And so there's that first vertical line there on the left around March 16th. That's where businesses started shutting down. Over 30% of them closed in about 2 weeks. So most people would assume that first initial line was when the shutdown happened, right? The state announced that businesses had to close. Clearly they're going to close unless they're emergencies. That's actually when the school closure was announced. So as soon as the schools closed, businesses started closing in droves. The state wasn't saying they had to close. The state wasn't saying that they had to do anything at that point. It wasn't until March 28th that the stay-at-home order was enacted by the state. And by then, the businesses had already kind of closed. We kind of hit the bottom of the trough by the time that announcement was made. So Jonathan's an economist. I'm not going to go into the correlation and causation argument, but I think that there is an argument to be made that as soon as people lost access to, at that point, what was their primary child care, businesses were unable to function. Now, did all of them close because of that? No, I can't say that, but I do think that there is both anecdotal and some pretty extensive quantifiable data that shows that without childcare, without people to watch our children, we can't go back to work. It doesn't work. You can't do stay-at-home education. You can't do, watch your toddler and make sure that they're not running wild in the streets, and also hold down a full-time job. And that's going to have an impact as we sort of push to reopen the economy. These things are hand in hand. You can't do one without the other. What else is happening? So currently there's about 45,000 Alaskans on sort of recurring unemployment. And that number is important for a couple reasons. One is it's obviously a horrible number. It's 12% of the overall workforce. That's over 1 in 10 Alaskans, right? But another piece of that is, and we'll talk about this a little later, one of the federal relief bills that was passed added on some additional funds to unemployment payments, $600 additional every week. And so for that 45,000, they represent not only this negative economic indicator, but also a fairly significant federal dollar influx into the state because of that incentive, which is going to lapse here on Friday, actually tomorrow. We were hopeful that maybe as would be reached, but the House and Senate recessed until Monday, and so the program will definitely lapse before they can fix it. The federal government also dropped new data today about the impact that the COVID-19 has had on the national GDP, and this is sort of our productivity as a nation. There's a lot of numbers out there, 30+%. That's not, they're looking at it kind of not correctly, at least in my mind, and Jonathan can correct me if I'm wrong. I suggest that we should look at it this same period over the last year at the same period, sort of a, apples to apples comparison. When you do that, it's still not very good. It's 9.5% lower this quarter than it was the same quarter last year. And then if you look at it the way they're doing it, it's 33%. Either way, it's a large lapse in productivity that's indicative of a sort of longer economic downturn than I think anyone was anticipating when we first started trying to find solutions to this. When it comes to the unemployment, there's a couple different models that are out there. The top left one, this is sort of on the bottom row is how much you make annually when you were employed. And then the dots sort of indicate where you would fall in terms of the unemployment you receive based on your previous income. So with $600 flat addition, you can see that that's pretty high up, on the scale. If you look to the right, this is sort of the Republican proposal out of the Senate, which is 70% of your income. So you'll sort of be set at 30% lower than you've made in the past. It's sort of a built-in reduction in wages meant to try and spur people to go back to work, because their theory is that with the additional funds being provided for unemployment, people are choosing unemployment over employment. I'm not 100% convinced that that is actually the case. I'm sure that there are examples of that, but broadly speaking, if you look at the number of jobs that are or the number of businesses that are hiring right now, we would need to provide over 40,000 jobs in order to fully employ just the people that have gone on unemployment during this COVID-19 shutdown. And I don't see that many jobs on the street right now, especially considering that I think it was 2 weeks ago, we were showing somewhere north of 30% of the businesses in the state were actually still closed. So this is going to be a problem going forward. There's sort of competing proposals. Where it ends up, I don't know, but this is definitely one of the sticking points in terms of the House and the Senate. They're both sort of drawing a line in the sand on this and a few other issues we can talk about later. Ultimately, the reason this is important is the more money people have, if they're unemployed, the more they can afford other services and other things. And so it sort of serves as an economic driver. The less money they have, the less money goes into the core costs that they incur. And that can have a trickle-down effect on certain industries. It's not all doom and gloom. The federal government has passed a series of relief bills, the largest of which was what is called the CARES Act. And that is the largest peacetime relief bill ever passed. It was over $2 trillion. I think it was $2.2 trillion in funding. And this was preceded by something called the Family First Act. The Family First Act was sort of important because that's where the $600 additional payment for the unemployment came. The CARES Act is important because it created the Paycheck Protection Program, as well as the Economic Injury Disaster. Well, it didn't create the Economic Injury Disaster Loan, but it provided additional funding for the EIDL, and it created the Economic Injury Disaster Loan Advance, which was a small grant that was sort of attached to the original program. So these programs have dumped a lot of money into the economy. The first round of Paycheck Protection loans was distributed within 10 days. It was a huge amount of money. North of $350 billion were deployed in under 2 weeks. They went back and refunded the program with some additional dollars. To date, over 5 million loans have been made nationwide for just under $520 billion worth of funding. There's still roughly $125 billion left in the program. So if you are eligible and you haven't received a PPP yet, it's not too late. It's getting harder to find banks that will service those loans, but there are some national options if you can't find a local lender. I do encourage going to a local lender first. They just have a better service model and they understand Alaska's economics a little better than a national one. But if there's no other option, do what you can to get into the program, because it was good to begin with, but it's gotten much better over time. They've made some changes that we'll talk about in a second. So far, a little over 11,400 Alaskan businesses have received $1.27 billion in funding through the PPP. These dollars are largely meant to be spent on payroll. So somewhere between 60 and 75% of that total amount is going towards paying wages. And that's important because if you think about the number of people on unemployment in Alaska, that's on top of this. That's in addition to the just under $1.3 billion that the federal government pumped into our economy to keep as many people employed as possible. Round one, you were meant to spend out the dollars that you received within 8 weeks of receiving them in order to get it forgiven. You can get it 100% forgiven. And that deadline is right around now. A few weeks before, or a few weeks after now is when those will all be fully expended if you do it correctly, and most seem to be doing so. The second round was a little more forgiving. They changed it so that it was a 60-40, 60% payroll, 40% other eligible costs, and they extended the payback period to the end of the year. So that one's going to roll out possibly a little slower, but for most people, I think that these dollars are going to be expended fairly rapidly because that's how they're meant to be done. If you look at how we did in terms of, I just picked a few states that are somewhat similar in size, population, economic makeup. A good way to look at how we fared compared to other states isn't necessarily the gross number of loans or the gross amount that we received. It's actually, I think, the percentage of eligible payroll. And that's where you take the number of eligible businesses and the number of employees those businesses have and juxtapose that with the amount of money we received and see how many of those salaries could have been paid with the dollars that we received. And based on this calculation, roughly 75% of the eligible workforce in Alaska could have had their payroll paid through the amount that we received, and that's on par with most other states. In terms of averages, the national average for PPP loans was $105,000. Alaskans actually received about $112,000, largely driven by the fact that our wages here are higher than in other places, driven by increased costs. So we're still pretty much on par with the rest of the nation. They released, oh, I'm sorry, Melinda, yes.
Yes, sorry, John. I was just going to interrupt. We had a question from the chat. if we are home child care providers, do we still qualify for the PPP?
It would depend on how you're structured. So if you're a sole proprietor, an LLC, anything like that, yes. And we'll talk about how we sort of determine how much you would be eligible for. I think it's after this slide, but it's basically the amount you can get is limited by your payroll. So it's 2.5 times your average monthly payroll. So depending on how you're structured as well, there may be some difficulties in terms of calculating your salary per se, depending on how you're structured. I'm happy to, if you want to reach out to us, we can dig into your financials, dig into your company structure and work with you directly. More than happy to do that. Because it's really, there's a lot of different variations and a lot of different ways to do this. The SBA has been really good about releasing data related to these programs. The most recent data dump was actually the names of and the amounts that they received of anyone who received more than $150,000 in PPP funds. And then for those that received less than $150,000, they released NAICS code and zip code level data. So these are the industries broken down. The orange is over 150,000. The blue is under. As you can see, the vast majority of the loans were much smaller than 150. But there were some larger loans made, largely in healthcare, construction, accommodation and food services, professional, scientific, and technical services, and the retail trade. Other than retail, what's driving those larger loan amounts is the base wages of the people involved. They tend to have higher pay scales in those industries, and so they're eligible for a larger dollar amount through PPP. I will tell you that these top 5 industries that received funding here in Alaska are almost identical to the top 5 that received funding nationally, except other services, in our case, was replaced by manufacturing nationally. The reason that wasn't as much of a thing here is that the manufacturing industry just doesn't have a very big presence in Alaska. What little we do have, 70% of it is seafood processing. So let's talk a little bit about this program. Oh yeah, Melinda, go ahead.
Sorry,
you can just jump in and roll over me. It's all right.
Okay, I'm trying to wait for a pause. But so we had just a follow-up question. When you were talking about structure of your program, they just wanted some more information about what you meant by that. Like I think when you were talking about like if you're an LLC or that type of thing.
Right, and actually we're going to talk about the specifics on who's eligible and who's not in these next 2 slides. So maybe that'll help if it doesn't answer your question. But basically it's how you're licensed necessarily. This is meant for licensed businesses in the state of Alaska or certain nonprofits, not all nonprofits. So if you don't fall into one of those 2 categories, it is problematic. In terms of what you can get, it's up to $10 million. It's equal to basically 2.5 times your average monthly payroll cost. And it's minus the outstanding amounts on any EIDL loans you've obtained after the 20th of January. It's a 5-year maturity at a 1% annual interest rate, but again, you really want to get this and spend it in such a way that is 100% forgiven. If you use this correctly, you do not have to pay this back, and it should not convert to a loan. The good news is if you run into a problem where, originally what happened was people would get this PPP, the clock started ticking the minute the money hit their bank accounts, and they hadn't brought anybody back to work yet. And so they were scrambling to try and get their employees to come back. Some of them, they're like, hey, I don't have kid care. I can't, this doesn't work for me. I can't just drop everything on a dime. And so they weren't able to fully expend the amount they thought they could in the time frame that they had. It used to be a very strict 8-week period. The good news is anything that's left over after the forgiveness period, you can just give back. You can just pay back. There's no early prepayment fee or penalties. It's not ideal. You can still keep it. It's a 1% loan. It's not terrible, but you're not on the hook for a loan if the worst case scenario happens and you can't get it all forgiven. There's also a payment deferment for the first 10 months. So if you do convert it to a loan, you don't have to start making payments for almost a year leading up to or after you receive it. So this is the new loan forgiveness criteria. It used to be 8 weeks. Now it's 24 weeks. At the time, it's basically the end of the year, December 31st. You can get your forgiveness based on 60% payroll and the rest spent on rent, utilities, and mortgage interest. So if you spend in those 3 categories in that proportion, you can get 100% of whatever you receive through the Paycheck Protection Program forgiven. Now, the forgiveness criteria is just starting to come online. The portal to file the paperwork for that is going to be launched here, I believe, on August 8th. So nobody's actually gotten their PPP forgiven just yet, but those will start happening soon, and the banks will be processing them, I think, as rapidly as possible going forward. These are some of the changes they made late in the program. They increased the loan maturity. It used to be 2 years, now it's 5 years, the forgiveness period. They changed the way that they calculate FTEs. That's interesting. Am I doing that? Looks like there's somebody drawing on the thing. They changed the way that they do FTEs and how they calculate full-time employees in terms of calculating the amount of money you can be eligible for. And you also, and I don't know how big of a deal this is for your industry, but previously, if you received a Paycheck Protection Program loan, you weren't able to take advantage of payroll tax deferments that were also created through the CARES Act. So there's a lot of tax deferments and abatements that were included in the bill. It used to be you had to pick either or. Now you can do both, which is pretty nice. The second and hopefully that helped answer some of the questions on who was and wasn't eligible. But basically, you have to have been in business prior to the March 15th deadline, or March 15th announcement of a disaster declaration, and you have to be either a business or a 501c3 or religious institution, nonprofit. 501c6s, 501c4s are not eligible at this point, but some of the changes they're proposing later on would make you eligible if you're either of those. The Economic Injury Disaster Loan is the other major funding mechanism that was funded through the CARES Act. This is more of a traditional loan program. The Small Business Administration deploys these whenever there's a disaster. They deploy them where there's wildfires. When we had the big earthquake in Anchorage in the South Central area a few years back, they deployed these loans to businesses that had broken inventory, structural damage, things along those lines. Nationally, about 2.6 million loans were made for about $150 billion total. So this is a much smaller amount than the PPP loans, especially for Alaska. We only received about 6,700 of these, total of $400 million. So very small, comparatively small dollar amounts. What makes these attractive is that they're much more flexible. I mean, these are basically sort of traditional loans. They're open to for-profits or nonprofits, the same criteria as the PPP though. 501c3s, 501c19s, and agricultural co-ops. The loans are up to $2 million, although we're seeing a kind of a soft cap at about 150,000. I think they're trying to stretch the dollars among more businesses because they didn't get a whole lot of money for this program. The interest rate is 3.75% for businesses, 2.75% for nonprofits, and you get maturity of up to 30 years. It's determined on a case-by-case basis, and creditworthiness and ability to repay the loan comes into play here. So this is, again, it's more like a traditional loan application than the PPP was a slightly different process, mainly because they didn't actually expect a lot of people to have to pay it back and treat it as a loan per se. This one, it's definitely a loan. Now, the good news is you're much more flexible on what you can use it for and when you can use it. Fixed debts, payroll, accounts payable, bills that can't be paid because of the disaster, a bunch of things. You can't use it to refinance existing debt, but you can use it for costs that you've incurred largely due to the COVID-19 situation. The other issue that a lot of folks have, especially nonprofits, is the loans need to be secured. You don't get rejected if you don't have collateral, but if you do have collateral, the SBA will negotiate a collateralization of this loan with you. And sometimes the terms have gotten a little wonky. They were swamped with applications is sort of how I'm reading this. And they're basically just they're just throwing out numbers. And if you go for it, that's great. If you don't, if you push back and say, hey, this is significantly more assets than the loan is worth, we've seen that they'll work with you. It slows down the process, but ultimately I think it's the right thing to do if you decide to go this route. another difference between the EIDL and the PPP. The EIDL is done directly through the Small Business Administration. So basically, you're taking a loan from the government. The PPP is done through private sector financial institutions, and they're getting repaid by the government. So it's a slightly different process. There's also a difference in the level of resources that each entity can bring to bear to process these loans. The private sector seems to be able to do this a lot faster than the government was, mainly because there's more of them, right? I mean, it just makes sense. The SBA was never meant to process loans from every small business in the country at the same time. Last but not least, I only bring this up just to showcase the money that was injected in the economy. The EIDL grant program, this was up to $10,000 based on the number of employees you had. You applied for it when you applied for the EIDL grant. You didn't have to take the EIDL loan. You didn't have to take the loan. If you got it, you could still keep the grant. They've ended this program. They ran through the $20 billion that was allocated to it, made just under 5.8, sorry, that shouldn't be loans, they're grants, 5.8 million grants to entities across the country, 10,400 of them roughly here in Alaska, worth just under $33 million. There were a lot of problems with this program. It was meant to be a quick infusion of cash to all the businesses in the nation. Unfortunately, the SBA didn't really have the resources to process that many applications at the same time. And so the money actually didn't end up getting, it was supposed to be deployed within weeks of the program launching. We're seeing people that just got their EIDL last month. So it took significantly longer than I think anyone wanted it to. And by that point, there were other programs out there, so the money wasn't as impactful as I think it was meant to be. But still, it was a grant, and grants for businesses or nonprofits are few and far between, unfortunately, when it comes to COVID-19 funding. The last sort of tranche of CARES Act funding that I want to talk about, there's sort of two pieces to it. The state of Alaska got $1.2 billion in funding through the CARES Act to be used in a variety of ways. They've allocated all of it. The two pots of money that I want to really call your attention to are the $568 million for direct municipal relief and the $290 million for small business relief. The $290 million was used to create what's called the Alaska CARES program. And this is the state's sort of version of the PPP, if you will. It's a direct grant. It's not a forgivable loan. They tried to make it a loan originally, but the federal government really didn't like that idea. They wanted them to just give the money away. So they contracted with a financial organization, Credit Union One, to process the applications and help people, help get the money on the street. Initially, they were hoping to get about 150 million of the 290 million on the street in the first month. They've fallen a bit short of that goal, unfortunately. It hasn't worked out like anyone hoped. It's going much, much slower. To date, this is about a week old, this data, but they've received about 225 applications worth about $96 million total. They've actually processed and paid out 273 of those applications worth $11.4 million. The program launched on June 1st, so we're coming up on just under 2 months of operation. And I think it's proven a lot more complicated than anyone anticipated. The CARES Act is a very good program in that it is a grant, and that is, again, they're very rare. The money is distributed through, as I mentioned, CU1. There's groups called the Alaska Regional Development Organizations, and they are sort of economic development entities that have been contracted by the state to provide technical services in their regions for people looking to apply for these grants. And they're meant for small businesses or nonprofits. Small businesses with less than 50 employees. Nonprofits have to be 501c3s. And you have to have been in business or in operation before March 11th. If you're a cannabis business, if the business is a secondary income source, the definition on this is a little loose, but basically if you have a job, your business, and you also have a business, your business isn't eligible. There isn't really a better definition that I can find than that. they really consider anything that you do outside of regular employment as sort of a side hustle for the purposes of this grant. And so you wouldn't be eligible. You can't have more than 50 employees. Your business can't be licensed out of state. Can't have filed for bankruptcy. And this is the big sticker, I think. You can't have received any PPP or EIDL funding through the CARES Act. Now, this is in the process of being changed. There was a lawsuit. DCCED tried to allow for up to $5,000 in funding to be, and you still be eligible. A gentleman in Juneau actually sued the state to put an injunction on it. He didn't agree with how the language for the authorization language was passed. It was done through kind of a strange legislative maneuver. And so the injunction was thrown out. The case is still pending. DCCED is taking that as license to allow for up to $5,000 in PPP or EIDL and to expand the program to include 501c6s. Unfortunately, those changes won't be implemented for a few weeks yet. So if you have received PPP or EIDL funds, you're currently not eligible, but hold on, because that's going to change soon. The grants range from $5,000 to $100,000, depending on eligible expenses you've incurred since March 11th, and then forward projecting eligible expenses out 8 weeks from the date of your application. So this is kind of an interesting way to do this, and I actually don't know of any other program that does this. It means that the longer you wait before your application is submitted, sort of the longer that backward-looking time period is, so the more expenses you can tack on there because as you accrue them. Most programs are a certain time period. Since X date to today, that's what you get. This one is a rolling date, so the longer you wait, technically speaking, the more eligible expenses you can incur. There's a 20% set aside for communities under 5,000 people. The last I heard, they were actually going through that allotment pretty quickly. So the rural communities the money is getting deployed there fairly rapidly. They haven't hit the cap yet. Once they do, then those communities' applications will be put into the general pool, and it's first come, first serve. In terms of eligible expenses that you can get paid back, payroll costs and expenses, short-term and credit card debt incurred during the emergency, that's a big one. Utilities, purchasing personal protective equipment, business-related equipment, that's a fairly broad category. Replenishing your inventory in order to open. Any kind of new insurance that you need to protect yourself from liability. All of those are eligible in order to get either repaid or forward pay through this program. I'll stop there for a second. Oh yeah, I must have read your mind.
Yeah, we have a couple of questions in the chat box. So the first one is it possible to be a child care provider with a business license, but not be licensed through the state or muni? Are these business owners eligible for loans, grants, etc.?
If you're not licensed with the state or muni, who would you be licensed with?
I think, and Kat, you may, I don't know if you can speak, if you can unmute yourself and ask your question.
Yeah, I intended it to read, it is possible to have a business license but not have a child care license. So if you have less than 4 kids that are related to you, you can have a business license and not be licensed through the state or the municipality, and still have a business license to perform child care in your home. Are those kind of businesses eligible for these grants and loans?
I believe so, yes, they should be. And if you'd like, circle back with me after this and you can show me exactly what you're talking about. But yeah, if you have a business license and you're operating as a business within the state and within certain municipalities, then yes, you should be eligible. Now, how much you're eligible for is going to depend on how that's structured, and that.
Thank you, Kat. And then we had another question. You know, some of that federal CARES funding is going into communities across the state, obviously, and then the communities are deciding to allocate some of that funding to childcare. Like we know that's happened here in Anchorage and Fairbanks and Juneau and Ketchikan and I think Petersburg. And so the question is, so knowing that that funding is kind of coming through, do they count that as federal funding? And I think they're just worried, like, what does that let them qualify or not qualify for, or that kind of thing?
And that's a really good question, because originally we were concerned that the municipal funding that was derived from the CARES Act would preclude you from getting the Alaska Cares. That's not the case. They've limited it specifically to PPP or EIDL. If you've received either of those types of funding, you're not eligible currently for the Alaska Cares Act. They're going to change it so that you can have received up to $5,000. And what's interesting there is they're going to let you give back anything over $5,000 if you'd like to become eligible for Alaska Cares. Between you and me, I really don't like that. I think that that's a bad idea in terms of making people fight for different pots of federal dollars. I think that what, as I was sort of trying to convey to you earlier, the economy and the businesses and the nonprofits within it need all the money we can give them right now. There's no single pot of money that's going to solve the problem. So I'm working with the state and the legislature to try and get that expanded to just say, look, doesn't matter if you've received any funding, it's fine. But for right now, yeah, the only ones that will preclude you are PPP and EIDL. All right, should I keep going, or is there one more?
There's no more in the chat right now, but I didn't know if just with your pause that you were taking, if people wanted to ask a question.
Sure. I know I'm blowing through a lot of information here. I apologize. I will definitely make this PowerPoint available to anybody that wants it after the fact.
And we will do a question and answer too at the end. Like at the end, we'll also pause again. So if people are still thinking of questions or come up with other things they want to ask, we can do that.
So the question about—
and then I say that and there's one more.
Oh.
Okay, so another great question. So is it appropriate to use your grant money to offer scholarships to families that are unable to afford childcare? Which is a really good question.
It wouldn't work for PPP. It might not work for EIDL. I don't think it'll work for that either, to be honest with you. Yeah, that's going to be a tough one. I'm not sure that that's going to be an eligible. The only one that you would be potentially able to have been used that way would be the EIDL Advanced on a state and national level. Now, the local governments, and that's what we're going to talk about here for a second, they're launching their own versions. You mentioned specifically for childcare. They're also doing it just business grants and things along those lines. And they are all wildly different. So some of them may be appropriate, some not. Generally speaking, though, re-granting funds from these programs to someone else probably wouldn't work. Happy to talk about that too and try to brainstorm some ideas there, but I think that that may be a tough one because a lot of it is either based on eligible expenses or calculated through actual expenses. So forward projecting costs is difficult. So the second big pot of money that came through the CARES Act was the local government funding. And this was the $560 some million that was deployed to basically every community in the state based on a fairly complicated formula, a combination of what they've received from the past from the state government prorated, and then in addition, which ones had sort of particularly at-risk industries. A few of the programs that have been spun up, this is not all of them by any means. These are, I think all of these are still live. Maybe one or two of them have ended. KPB, I think, may have just ended last week. But they're roughly between $1 and $5 million in terms of size. And they run the gamut from Anchorage's pilot program was very specific on who they were targeting in terms of underserved business owners, minority business owners, things along that lines. And the way they selected the people that got the funding through the program was, I haven't seen this anywhere else, it was basically a lottery. No matter what point in time you submitted your application, at the end of it, they randomly selected applications until they reached their maximum $1 million amount for their pilot program. Most other places, it's a first come, first served basis, or until the funds are expended. And there's some that aren't specific to businesses. Some are for rent and mortgage abatement. Some are for childcare. Some of the funds are allocated towards specific industries, commercial fishing. There's one that's particular to subsistence fishing and hunting, sort of supporting the equipment that's needed for that. So if you're in whatever community you're in, it's almost guaranteed that they either have launched, are launching, or will launch one of these programs. I highly recommend checking out their webpage. Most of them have a C19 resources page, and just trying to stay on top of it. And if they're still in the development stage, I would very highly recommend reaching out to your community leaders and trying to inject yourself into that conversation, making sure that your industry is represented, not excluded, making sure that they understand your unique situations, whatever they may be, in terms of structure or the way you allocate expenses, so that you don't end up getting left behind. Because some of the programs, they tried to cast such a broad net that a lot of industries got left out, especially the ones that aren't sort of as traditional as others. In particular, the tourism industry really got nailed in the early days of PPP. Commercial fishing through Alaska Cares and PPP had a hard go of it initially, and a lot of changes had to be made in order to get them on board with the program and get them the funding they needed. Last but not least, I mentioned I want to talk a little bit about what's coming. So the CARES Act was the large relief bill that was already passed, $2.2 trillion, funded quite a few programs, has expended a large portion of the money.
Oh, John, you're muted.
I apologize. I moved myself out of the way so I could see the full slide, and of course, technical difficulties. I'm really glad we're recording this so I can watch this later and cringe a lot of levels.
No worries.
I'm still not
You're
sure
doing
where the doodles, can anyone else see the doodles on this slide? It's been like on the side here, there's little black marks. I'm not entirely sure where those came from, but I really feel like I'm hitting it out of the park today. This is fantastic. So the HEROES Act, it was passed by the House, democratically controlled, and they had a few things that they really wanted to get in there. The eviction protection was a big one. That's lapsing soon. Conservatively speaking, for Alaska, the estimate is somewhere between 23 and 29,000 people are at risk of eviction once this goes away. That's a huge number of families, quite frankly. And if that happens, that would be catastrophic on almost every level, economically speaking. So the HEROES Act expands the eviction protections to cover nearly all rental properties. Previously in the CARES Act, it was only properties that had received some form of federal funding or federal assistance through loans and things like that. Still a significant number, but this would expand it to just about everybody and extend the eviction protection for another 12 months. It also added $300 billion for housing programs, rental assistance programs, and things like that. The HEALS Act, which is the Senate version that was just released recently, has no such protection. There's nothing in there that would do anything for evictions or rental abatements. Employee tax credits are in there. Somebody's going to have to do the math on which one of these is actually better. 80% up to $15,000 or 65% up to $30,000. They're both in the ballpark, and these haven't shown to be huge incentives one way or the other when it comes to making moves, economically speaking. Education funding, which wasn't addressed in the CARES Act, is a big deal in actually both the HEROES and the HEALS Act. The HEROES Act has $58 billion for K through 12 schools and $42 billion, which I've delightfully misspelled there, for higher education at universities, colleges, etc. The Senate's bill actually has a larger amount, $70 billion for K through 12 and $29 billion for higher education, as well as $1 billion for the Bureau of Indian Education and $5 billion directly allocated to states' governors to spend either on K-12 or higher education wherever it's needed most. One of the interesting things about the Senate version is a significant amount of that $70 billion for K-12 is allocated specifically to reopening high schools for in-person classes. So they're really trying to incentivize driving those classes open and getting at least the high schools back online as quickly as possible. I don't believe there's any such provision in the House HEROES Act. Liability protection. So this, along with the unemployment tax credits, has been listed as one of the bright red lines in the sand by the Senate. They, Mitch McConnell in particular, has said no bill will be passed, no relief bill will be passed that does not include liability protections for businesses, nonprofits, universities, government agencies, you name it, against liability issues stemming from reopening and bringing people back to work. What that looks like, whether or not, and it seems to be a bright red line in the sand for the Democrats in the House as well. So that's one of the reasons this is taking so long, is that they're sort of fighting back and forth on which way that's going to go. There should have been, sorry, I skipped one of these slides. The other thing that's coming through that I think is actually going to be pretty important is the stimulus checks. This was created in the CARES Act. It was $1,200 base pay for individuals under a certain income amount, slightly, getting smaller and smaller, up to $75,000 for a single filer or $175,000 for joint tax filings. You also got a flat $500 for every kid under 13. The HEROES Act from the House is $1,200, and then you also get the same amount for dependents, a maximum of 3. The Senate bill is slightly different because it expands the number of people that qualifies as dependents to basically anybody under 23 that's in your household. It also excludes prisoners, and I know this is going to be outrageous to most people. The dead can no longer receive stimulus checks from the government. And the reason they had to put this in there is because the first time around, apparently we sent a lot of checks to dead people. And we're asking for that money back. Now, who we're asking to give that money back, I'm not entirely sure, but they are no longer eligible, those freeloading dead people. The unemployment insurance is the last sort of thing I'll talk about here. Well, actually, beyond the Paycheck Protection Program. CARES Act added $600 a week. The HEROES Act, basically the same thing. It extends the deadline on everything into 2021. It splits out gig workers, independent contractors, part-time workers, and the self-employed into a separate category that can keep on unemployment for a few more months past everyone else. But largely speaking, it's $600 additional. The Senate version, much less generous. It's going to start off as $200 additional per week through September, and then starting in October, it's going to be that 70% of your base income for going forward from October. The difficulty here is also going to be in the implementation. I don't believe that any of the state unemployment agencies are going to be able to implement this within under 20 weeks. The reason being, this basically means that every single person that files for unemployment has their own special rate based off of their own previous income. So you're gonna have to calculate everything individually. When they changed to the unemployment insurance eligibility requirements to include gig workers and things like that, it took them over a month just to allow those people to apply. And that was nowhere near as complicated a change as this is. So I think this is going to be a sticking point. The Senate seems willing to hold the line on this, but who knows? And then last but not least, the Paycheck Protection Program is getting a revamp. The HEROES Act, the House version, expands eligibility, eliminates the 60% to payroll, so just makes it a straight up, any forgivable expense is fine in any proportion, and it's sunsets in December 2021. The Senate version is actually more interesting. It allows you to go back for another round of PPP if you've already received one, as long as you're under 300 employees and the total, and you've suffered more than 50% gross revenue losses due to COVID-19. The total amount you can get between a first and second PPP can't exceed $10 million, but it will allow a lot of people to go back and get another round of funding, which I think will be pretty welcome. It adds $190 billion to the program, either for initial or second PPPs, and it does eliminate the 60% payroll requirement as well. So both the House and the Senate seem to think that businesses should be able to spend this money however they need to, which I pretty much agree with. And that is an extremely long-winded explanation of all the different financing mechanisms and economic situations that are out there. I know it's a lot to take on. I apologize. Happy to answer any questions now, or if you'd like to wait until you're no longer stunned with all this information and you come up with questions later, I'll put my or this is my email and my cell phone here on the slide. So reach out to me anytime.
Melinda, would you mind if I pop in and ask questions while we give the cohort a chance to write some down and send some in?
That sounds great. Thank you.
So I'm struggling because he thinks I'm going to give him a hard time. But actually, what I'd really like to know, what I heard you say was that, really, if it's if there's childcare providers out there, look, the things that they should be looking for are there's still time on the PPP. And so if they haven't applied for a PPP, they should be looking at that. And even EIDL, but it sounded like that was getting smaller, that they should be on the lookout for the changes in the Alaska Cares program. That's going to be a very important thing, especially if they've already received PPP monies, to look at that. And then also to really start interacting on the local level. So for example, if you're here in Anchorage, there's $10 million of money set aside to support childcare providers. And there might be your other municipalities where you're living, talk to your city government, talk to your borough government, because some of them are still trying to figure out how to use this money. And you can advocate not just for yourself, but for the sector out there. So did I miss anything really important, John, that the providers should be focusing on as possibly actionable for them?
Absolutely. The only other thing that I would add, and that was a really good summary. See, I should have just had you do this. We could have been done 5 minutes after we started. The only other thing I would add is there is, in a lot of cases, an issue of timing that you should factor in. So by that, I mean the Alaska Cares Act, the Alaska Cares Grant only cares if you have received PPP or EIDL. They don't care if you've applied. And they don't care what happens after you submit your application. So if you do the Alaska Cares first, then you can go for the PPP and the EIDL. You can get all three and it's not a problem. It's only if you do it in the wrong order that you are eligibility outed of the Alaska Cares Grant.
So Alaska Cares first, PPP and EIDL allows you to avoid the issue right now with if you have received money from PPP or EIDL, then you are not eligible for Alaska Cares. But if you've applied or haven't applied, you can still get in.
Yep. The application is a snapshot in time. They don't care what happens after that. They don't care what money you receive after that. It's a very strange limitation. Some of the local programs, some of them have similar caveats where if you've received other types of funding, you're not eligible. So again, look at the criteria and then time your applications accordingly.
Okay, we have a couple of questions. So first, I'm just going to backtrack to Jane had a question that Jonathan answered in the chat. And I thought maybe, Jonathan, if you could just address that one since you responded it in case other people might be curious. And then I know we have another question from Kat. So Kat, I'll ask yours after this one.
Okay, so there was a question in the chat that said, do you pay federal tax on grants? And so I'm going to take my non-accountant to answer for this, but generally speaking, you do not pay taxes on grants. However, let's say you use that grant money to pay for business expenses that you will have or you would have had. At the end of the year, all things being equal, you will have made more money because you will have less expenses to deduct at the end of the year. And so you could end up paying tax on that increased net income. So clearly you might want to spend that grant money and document it that you spent another grant money on things that maybe aren't deductible as a business expense. That's where you should go see your local accountant if you get a grant. Generally speaking, I would not be afraid of applying for a grant because you're afraid of increased federal tax liability. If you have increased federal tax liability at the end of the year, you would generally speaking have increased income to help cover it. So don't be afraid of that, but definitely do your homework.
Thank you. And then Kat's question was, as a childcare homeowner operator, I have no payroll as I pay myself. I'm unclear as to how PPP applies to me.
Yeah, and originally it didn't. It was really complicated. They've changed that lately to allow for different calculations. So if you want, we can walk you through that. There's a couple of how-to guides on the C19 site that I listed at the beginning, but you'll still be able to. It's just based on different tax forms.
Are there other questions people have? Maybe we'll give people a couple more minutes, and then I'll just remind people, as Jonathan pointed out, you know, Thread has a COVID-19 spot on our website that has lots of resources, and on that we're keeping up to date on funding opportunities. And as we know more about the municipalities that are using their CARES funding dedicated to childcare, we are keeping track of that list and keeping it on our website as a resource for you all. So if you see your community listed there, I believe the plan is then to have just who you contact about that program and opportunity. So then you'll have that information to then contact them and just see how you apply or how the program works. So if you aren't seeing that on our website or are confused, you can always call us at Thread too. Well, it looks quiet in the chat box. If there aren't any other questions, I would just like to say, oh, thank you. See, Cassie is on it. She's showing our website right now. So thank you, Cassie. But yes, you can see here, dedicated CARES Act funding, and those are the ones that we are aware of right now. And so if you go to that page on our website and click on those links, then you can access that information. So go visit our COVID center that is constantly being updated. And many, I know of you are on our Thread newsletter or COVID newsletter that we're sending out weekly to get those resources and updates. But if you are missing those, you can always go straight to our website too. All right, and with that, I'm just going to double check the chat because I scrolled away from it. But I would really, really like to thank our guests. I learned a ton, and this is why you have the experts come to talk about it, because I know about this much in detail like you two do about all these different opportunities that are great for our programs to take advantage of. As Jon said, you can contact him if you have follow-up questions. I see one in the chat box that just said, when I did the PPP, it was based on my Schedule C. And I don't know if Jonathan or Jon want to speak to that, because I don't know what that means.
Yeah, no, and that's for folks that don't have payroll. That's how they calculate their self-payroll. That's definitely one of the ways to do it. Yep. Okay, great. So yes, if you need more information or support, you can contact Jon. If you need more support regarding Thread's website with the COVID resources or other technical assistance for your program during this time, please feel free to outreach us to us. We are so thankful that all of you are continuing to do the work that you do every day under these conditions. You are our frontline people, and we are so appreciative of all of your hard work. And we know to take then another hour and a half out of your day to come to training is a lot, and we just so appreciate and thank you for being here. And with that, and I would like to say thank you to Cassie for managing our IT, and to Jessica, who is managing our attendance. Please just, I don't know, Cassie, I'll just kick it to you. Is there anything else with attendance we need to do? Just, I don't want anyone to be forgotten.
Yes, I have an announcement about evaluations, and this is kind of a standard announcement if you've taken other Thread training, but there was an evaluation in the email you got to access this webinar. That is due by August 6th back to Thread, and there was information in that email to send it to Juliana Romer, our administrative associate here in the Anchorage office. If you do not turn it in by the due date, or you turn it in after, or you don't turn one in at all, you will still get credit for attending tonight's class. You just won't get a certificate. If your evaluation is in by August 6th, you will get a certificate. if you're faxing in your evaluation, it's really important to write your name on it or have a cover sheet so we can identify whose evaluation it is. The trainers don't necessarily see that. That goes to, like I said, our administrative associate. So your answers will still remain confidential from the trainers. However, we do want to make sure that you get credits, you get your certificate. Jessica, did you have anybody else you're looking to confirm attended?
I think we're good. The only ones that I was wondering was if Charlie, was there a Charlie that had a last name?
Hey, Charlie, if you're out there, if you can please let us know who you are so that we can make sure you get credit tonight. I mean, otherwise, I think that's everything that we had for this evening. And thank you very much for joining us. And thank you, Jon, for sharing your expertise with us, and Jonathan for weighing in as well. We appreciate very much having this opportunity. It looks like Melinda has one more thing.
Sorry, and I know, Jon, I don't know if Stephanie in our office had a chance to connect with you. There was a question if there's information on any of this in Spanish. And so I didn't know if you had access to any of like the information in Spanish that we could share with people.
I did. I actually, I tried to respond in the chat. I don't know if it went through, but the SBDC has quite a few of our resources for the COVID-19 and things like that in Spanish. And the SBA on their website actually has it in, I believe, somewhere north of 25 different languages. So Tagalog, Korean, Spanish, and others. So if you don't find it on our site, SBA definitely has it. And we're also able to do trainings in Spanish as well. So if there's something in particular that you'd like us to speak on, we can find an expert that hopefully will be able to make that work.
Great. Okay. Well, thank you. And again, thank you, everyone. Have a wonderful evening and enjoy the upcoming weekend.
Excuse me.
Yes.
Me. Hi. Yes, my name is Maria Isabel Pineda, and I want to make sure my name is in. You find my name there in the list.
We can have Jessica look.
Can I get the name again?
Maria Isabel Pineda.